Hello everyone, welcome to Elliottwave.com YouTube channel. Today is August the 29th and the chart of the day today is the Euro USD 60 minutes time frame here. Alright, so we're going to explain the primary view as well as alternate views and also the general structure for educational purpose as always. Alright. So let's see what we got here. We finished with 2 in the 115.705. Now, there is no question that the market is quite choppy recently, and that applies to the indices as well as the USD pairs, even the yen pair. So everything seems to be sort of in a sideways choppy structure, right? So let's take a look what we got here. So we finished with 2 in a structure we call expanded flat. Now this is not a very common structure, so it's a good opportunity to explain this structure right here. Let me see if I have the general structure for expanded flat. So here is the general structure of expanded flat. It is basically what we call a 3-3-5 structure, because if you look at the subdivision, so expanded flat is being labeled as ABC. So many people that just begin to study Elliott Wave learn ABC as a zigzag, right? But it's not always a zigzag, right? Flat is also being labeled as an ABC, but the difference than the zigzag is the subdivision, right? A zigzag is a 5-3-5, but a flat is a 3-3 and then 5, right? So let's take a look here with the Euro USD. Now you don't see the beginning of the flat, which is so, but you see this ABC here, right? A, B, and then C. So the C wave here is we label it as a 5, and you notice a couple of characteristics here in the flat. The B, an expanded flat, the B breaks above the beginning of the A. The C surpass the A, so that is a flat. So in a way, this is more or less a very it's a complex correction. It's a choppy complex correction because the rally breaks above the previous peak and then it completely reverses and breaks down below that previous low. So in a way, if you're trying to trade this, it's going to be very difficult, right? Because it's not really trending lower low, higher high. It's all over the place, right? And in the euro, if I zoom out on the 4-hour, and we're going to focus on the 2 and the A and the B and the C. Now you see this is the 2, right? And I'm going to place the C. This is the C, right? And this is the B right here, right? And that will be your A. And that means your wave 1 is right here, right? So this is an expanded flat. You see how choppy it is. It went up, surpassing above the previous peak, but then it reversed completely and breaks below the previous low, right? So it's exactly what we are showing here. It rallied, breaking above the previous peak, but then it reversed completely and break below the previous low, and then now it rallies back again. So as you can see, very difficult to trade. It is one of those structures that is complex and not easy to trade. It doesn't matter how good you are as a waver or how good you are as a trader, something like this is going to be extremely difficult to trade. Now this is wave 1. That means we should be having a 5 swing up, which it looks like it did. 1, 2, 3, 4, 5, right? Could be diagonal, it doesn't matter if it overlaps. And then you got an ABC, and then now we might start the new leg up again. However, still no confirmation until we can break above this peak, right? Until we break above this peak, we can continue to chop around. We can even reverse again, because again, you don't have the confirmation whether this truly is the end of the correction unless you can manage to break above the previous peak again. Now look at this. Even when we did a 3 swings pullback and break above the peak, typically that will signal that's your wave 2. In the more ideal, less choppy environment, that's what usually happens. But in this case, it did break above only to reverse and break below. So that means the market is pretty choppy, right? So all I'm trying to say is just sometimes a break above the previous peak doesn't 100% guarantee it will not break below the low. And that's why risk management is very important, right? It is always very important to calculate position size and manage the risk, because nothing is 100%. We always just forecast or trade based on probability, but it's never going to be 100%, right? And that is the risk that we have to be willing to embrace when we want to be in this business, right? So again, here we are looking what we are calling this wave to completed. And then now let me show you a couple of things that basically makes this view the more likely scenario. Well, number one, if you look at the rally from here after finish with, it looks like a 5 swing. Again, 5 swing is a motive sequence. That means that it favors more upside as long as we don't break below 115.70 again, right? Again, it's probability. 5 swing favors more upside as long as we don't break below the beginning of that 5 swing, right? So that's why I think this view looks to be pretty decent, pretty good, because of that 5 swing rally, and most likely you're gonna get at least further follow-up. Now, in terms of the alternate in the short term, the alternate in the short term is, now a lot of people, the beginners, the amateurs, they believe this is going to happen exactly like what we are showing, but no, not necessarily. Like for example, this move down, the invalidation level is right here, guys. So this level actually is the most important level. Not necessarily it has to finish exactly 116.50 and rally higher, perfect on the tick. It may happen, it may not happen. So the alternate here could be that we could be pulling back, ending W here in the shorter cycle, and then the X, and then the Y like this before going up. So that will be a bigger 3 swings, right? Or a 7 swing pullback, right? That's a possibility there. Yeah, so another possibility can become 5 ways down here, becoming A leg, A, B, C, same thing. As long as we stay above 115.70, we do like more upside. The other thing that I want to show in terms of a bigger double correction, all right? A bigger double correction simply means we're going to be doing something like this before turning higher. But again, for now, I don't really entertain that too much, because the short-term swing or the short-term rally looks like a 5 swing, which is again favoring more upside, and that's why I don't really think about this too much for the time being. Okay, but yes, we could be doing a little bit bigger pullback here in the wave 2. That is within acceptable alternates. Like we can do this, or this can extend a little bit lower like this to finish only in the A leg, and then you get a B leg, and then you get a C leg, and then now that is within acceptable variations. But as long as we stay above 115.70, we do favor more upside, right? Second thing I want to talk about is the larger degree euro dollar. So if I zoom out like this, right, you notice here this peak in July and this low in August, that was a very clear 3 waves down. So what does that mean? Well, that means it is not bearish, because if it is bearish, it would have been 1, 2, 3, 4, 5 with an extended wave 3 and then the 4 and a 5. But the fact that it was only 3 waves and then rally, well, that tells you the market is not really bearish, right? It's not bearish. So that's why a 3 waves down followed by what looks like a 5 waves up, again, overall bias higher is the right bias, right? Is the right bias from probability and Elliott Wave theory. That should be where your bias should be, which is higher. But again, confirmation wise from technical perspective, it will be breaking above here will confirm this one is in place. Breaking above here will confirm this one is in place, meaning it won't do bigger double correction. Now until that happens, what might happen is we can technically, from technical point of view, we can continue to trade in a choppy sideways price action. Now we can even do something like this and then rally again and then continue to chop around. Even can be doing a triangle, right? So the confirmation then is a break above the previous peak, but the bias is higher for the reason I mentioned. 3 swings down, 5 swing up. It does favor more upside as long as we don't break below this low. Now if it breaks below this low, what happens is it's going to be doing a much bigger double correction like this. So that will be your first leg, that will be your second leg. But if it breaks below here, let's assume the worst case scenario, still it is, the right side is bullish. Why? Because this leg is a 3 ways, which is not really bearish. It's just a bullish structure here. So that means if it does this, it will most likely find support at the next 100% extension area, just because this leg here is corrective, right? But again, we can talk about different alternates and so on, but the key is understanding what the right side is, understanding the different various possibilities, and understanding what will be more likely. So for now, what will be more likely is it more likely hold above here because the rally looks like a 5 swing, and that's it. So as long as we stay above 115.70, we can see further upside. Okay, so that is the update, guys, for today. As always, if you like to learn more about Elliott Wave, or you want to see our forecast in other instrument, or just a forecast of the euro in more regular period, feel free to check our service. Use the link in the trial in the description of the video to take our 14 days trial. We also currently run a Labor Day promotion, so you can also take advantage of that. It's a limited time where you can get when you can subscribe for a lower price. So see you all again next time, and have a nice day, everyone.